Havells, that's come out with a very steady revenue growth in the third quarter. The margins as well have expanded. So let's chat whether or not these kind of earnings growth levels at 20% CAGR growth is possible over FY17 to 20 or not. Bring on board Mr. Anil Gupta, Chairman and MD at Havells. Mr. Gupta, hi, good morning. Congrats on a very strong set of numbers. Very steady growth in revenues as well as PAT margins. What's worked for you this quarter? And is this kind of revenue run rate sustainable?
Well, it's very early to say that, but things have been positive in all the business segments. Switchgears also came back to growth. Lighting and consumer durables have shown decent growth. I would say the only place where growth was limited was the cables business, which we believe with the GST now stabilizing after the 15th of November, coming back to the pre-GST levels, should bring in demand back into the organized sector for cables as well. So I believe going into the fourth quarter, we are quite hopeful for a decent set of growth numbers.
You also focused on improving the margins of Lloyd's segment, but Lloyd's margins were impacted because of the transition towards new energy efficiency norms. What's the outlook on the margins on a consolidated basis and individually for Lloyd's as well?
So I think Lloyd, we believe that in the long term we will be improving margins. At this present moment, on an annualized basis, about 6.5–7%, and hopefully over the next few years we'll be improving that. But definitely, in this particular quarter, going into the new ratings, there has been an impact, but I think it should come back from this quarter, with the season also coming into play in this quarter and the next quarter as well. So we should be looking at the normalized EBITDA margins for Lloyd as well.
All right. The cable segment was muted as orders delayed due to volatility in commodity prices and GST played in. Will this sluggishness continue?
No, as I said, with the GST rate coming down to 18%, which is the same as that of the pre-GST regime, I think the growth should come back. And I think there was some confusion initially with the contractors in placing orders with the government department purchases. So I think that's all stabilizing, and hopefully cables and wire segment should also come back to a decent level of growth.
And what is the outlook on integration of the consumer durables arm of Lloyd Electric with the company?
Well, I think it's pretty well integrated. Most of the functions are integrated. Over the next couple of years, we will be focusing on bringing in-house production into Lloyd. But otherwise, most of the functions are well integrated into the Havells system.
So what is the demand scenario now post GST implementation, and would you say all the teething troubles are now behind you?
No, I think overall, GST has been a win-win situation for the consumer, for the industry, as well as for the government, with the compliance increasing. So I think I would say that the confusion period post GST implementation is over now, and we are now moving into a very normalized kind of a demand environment. So as the economy grows, we'll see similar levels of growth coming into all the product categories.
Tell me, what's the kind of capex that you're going to invest in for new product launches?
So our average capex is about 150 to 200 crores. We are now evaluating the possible capex for the Lloyd manufacturing, which will be frozen in this particular quarter.
We see 20% CAGR over FY17, FY20. What will drive this kind of compounded annual growth rate?
I think we'll have to look at business to business separately, and Lloyd will definitely have a higher potential for growth. Havells itself has a high base, so we should be looking at a double-digit growth. I think it will be not right to say overall impact, but we have to look at business to business.
All right, we leave it at that. Thanks very much for joining us and giving us that perspective, Mr. Gupta. It's really nice to speak to you today on the back of what you've delivered in this earnings, and we wish you the very best for the future.